Welcome to TradeTheMBI.com. This is John. This reports for the 25th of September, and of course, we're continuing. It's the slow push because obviously, with bulls having to do most of the heavy lifting here, it's a little bit at a time. Without shorts, it really makes it difficult to get those dramatic moves unless there's some pressing, excitement that causes everything to go. But the reality is that with the rate cut and that, there's going to be a lot of extra money available, and that is going to continue to drive things, irrespective of the fact that it's going to also have its add-on effects. But they figured the inflation in that isn't going to come until after the election, so why not? From an NQ standpoint, still holding well above that previous algo level. It's just going to be one of those, little bit of news here and there, and I think you're just going to get a lot of the back and forth, which is good from an intraday volatility standpoint, but nothing overly dramatic. The problem becomes if you get continued negative impact readings from economic situations. Of course, you have the impending strike for shipyards. That would be a definite detriment, which would cause a lot of concern, and see if that plays out. And that, will make a big difference as to how things play in the short term. But overall, we know that the market is going to be ending up higher, barring a much deeper recession than is realized, because at the end of the day, the Fed said everything was fine. So you either believe them or you don't believe them. And the data suggests that while things are pushing along, they're not great. But that's fine. It's been that case for quite some time now. From a Treasury standpoint, not a whole lot of activity. There's still a negative yield. Who wants a treasury? It just doesn't even make sense. But again, even with weaker demand, oil is definitely going to be on the upside because, again, they don't take the inflation hit. Euro, this is a bonus for them until the winter oil crisis begins and they have to start buying more expensive oil in dollars, and that will definitely put a crimp on it. Of course, they think the Eurozone is doing so wonderful. Pipe dream, but look at this with gold, and we've been talking about it for quite some time, and it's just, there's not going to be any end to this anytime soon. And I think that's definitely going to relate itself to crypto in that as well. Maybe not in the same way that it had been in the past, because I think that the maturity of your Bitcoins and some of these others have, evened out to the point where everyone knows what to expect from them. They're still going to have broad ranges, but then again, when you look at what we're seeing from regular currencies, it's pretty traumatic as well. Just that's why we follow the Euro chart, and that it's not exactly a straight line across and stable. It's been some pretty dramatic moves. Well, you multiply that times the value, and of course you get just as extreme moves from the crypto range. Overbought? Not necessarily. Pretty much having an opportunity of short-term buyers resetting here, and that's actually going to be a net positive for them. That would be enough for like ETH and them to finally have a base to begin to push from. From a 50K standpoint, not a whole lot happening here. We did get the NBI white spike, so we would expect to move towards that 50% reading here, down to 57. But I think we're still on tap to get towards that 6,000 range. From an intraday, it was, nice little option set up there. They opened up with things moving to the south side and then flipped it really quick. Boom. And that was it for the end of the day. And now here in post-market, they're just filling back in some of those. There weren't that many positive extremes. It shows you that the buyers are very content with where they're at this particular stage. And given that it's this late in the month, and even see new fund money for the next month come in, and when it does, it's going to have much more power, simply because what incentive does a short have in this particular case to want to think of a long-term scenario other than the economy's crashing, which clearly it's not. When you're spending that kind of money, at well over $1 trillion every 3 months extra, you better have some kind of growth, because at the way it's going, you're not getting the return for the investment, because they're not applying the money in areas that are productive from a growth standpoint. And that really gets into the whole basis of everything, the economic model. If you don't apply the spending to an area that's going to produce something, then you're just basically creating inflation for no particular value whatsoever. But it will help ease the deficit a little bit here. From 5 minutes from the European session, we're just continuing to fill back some of those. Well, there wasn't even that, like I said, positive extremes, it's just minor. So it's just normal range activity. As always, though, anything relevant, we'll put it on the Skype chat. Have a good one. Trade well. Continue to follow those readings.